Hello, everybody. Welcome to the latest edition of the Plus3 Futures and Commodities show. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How are you, Barrie?
Doing pretty good.
We had a relatively mild week in the markets compared to the previous.
Yeah, it was pretty good. I really can't complain. Well,
I mean,
other than a complete U-turn, other than that, but
yeah,
it was more like a week of U-turns, right? So
yeah, absolutely. It's
and counter trends.
absorbing the shock and seeing where the counter trends are going. And the big picture that in my review this week is that that's kind of going to continue. But I'm curious to see what happens with this bad boy Bitcoin, because as you know, if you've listened to these shows before, we've been using this as our proxy for risk. And look at what this thing's done in the past week. We found support during the plunge on the lows, right at the half square. That was a pretty good pickup for our square here. The lows came in a logical spot that made sense. And also, I remember watching this on the day we made lows, which was, I think, the 24th was the low. Or what was it? The 28th. Sorry, it was the 28th was the low. Bitcoin's low was the 24th. And it was a few hours before equities made the low, which was really interesting. The key thing here is we're at this full square resistance, which is a major decision point around 41,800, 41,770 area. This is going to the battle here. The winner of this battle here is going to set the direction not only for Bitcoin, but I think for risk assets. And right now we're at smack on the line, smack on the full square. So we have no clue which way it's going to go yet, but I'm watching this closely, and it may even happen before we open futures Sunday night to see which side's going to give way. Really important spot. Where are you on this one, Barrie?
Pretty much the same spot. I think.
Yeah.
First things first, we really have to clear that, sort of get on top, and we'll see. Timing was good. Everything is good. We got a nice first pullback. We have a strong move out of that first counter trend. So everything's textbook so far. And now we're stuck exactly at all that overhead, So
from here.
Yeah. I think once it gets above that, we'll be in better shape.
Yeah. And Barrie, for those that haven't seen the previous shows, Barrie's talking about the timing. The last correction in Bitcoin was 69 calendar days. We took 69 calendar days from the high here, and it got us right in the area of when we made our low. So we'll see how it plays out. This is the decision point. We're waiting for price to tell us. And once it picks a side, then we'll know, where the risk reward favors, either shorting or going long. We'll know when the price settles on one side of that line.
Right. But the push is definitely to the upside for now. So
no question about it. Let me flip it over to you. We'll review the big five and see what you got for us this week.
All right.
There's the ES.
Yes, ES, and it's good to take a look at the big picture to see where we are.
Where we've come from, right?
Where we're coming from. It's been a while.
We're not in the basement.
No, we're way up, and it's good to take a look just for perspective, eh? Otherwise you kind of tend to get stuck in the day to day and forget the big picture. And the reason I wanted to look at this was we have this 42.75 that we drew in a while back, and the reason for that was, other than it being sort of major support. Market, S&P really has a way of pushing past these key levels just enough to scare everybody into the other side. And, here's one example of it. And here's another example where we broke above the half square, right? We meddled in there for a long time, broke above, came back, counter trend up here, and then sold off. So like that, it does it. And that's part of the character, I guess. And so 42.75 is really key. And the story there is, we really want to hold above that. And if we can hold above it, then the buoyancy is sort of to the upside. And that's 270 degrees off the low. So the week before, we really pushed into that, right? Really pushed into it, forced a lot of people to jump into puts. And then what do? We ran the other side, talk about
It's a hell of a battle, man. It was like 4 days going back and forth across that line.
That's right. But if you notice, the lows were pretty much right on that line out, other than the false break spike there. Anyway, we came up. So the key thing to know, as long as we're above that, 42.75 to, 45, 43, let's say 43.25, that band in here, the market's okay. Yeah, it can be weak and you'll hear all kinds of stories, but that's sort of the area to really watch. If we crack through that level, then we're definitely entering a whole nother realm. And, we have a lot of open, downside that opens up starting with 4,000 right up here at the half square.
So you would agree that would signal that the next leg lower is starting if we crack that.
Well, I would say it's not even the next leg. It could be another phase unfolding in here, which could be, which could go into months. So that's why this is a big deal. It's not for quick swing trades. It's really kind of marks, the bigger picture, much bigger picture. So anyway, that's that's where we're coming from, right? And we held above it after the test, so that's kind of a positive. Zooming in on where we are, what we know when we were coming down, we were starting to break the half square. We talked about the possibility of it testing the low in October or the September low, and the possibility of a false break. I just remembered. So and we got that, but we really didn't have that kind of a quick move out of there. So then last week we talked about that. So this week, we got the move up, and there are a couple of key levels we really had to hold in order to sort of validate a push up. And one was this 44.23, and we held well above it. We'll see what happens next week, but as of Friday, we held above it. And on the upper side, for really to mount a decent challenge, we really had to hold about 45.50. And I also talked about this 46 15, 46 10 15 area to be the next one to sort of test on the way up, but the 45.50 being a key area to hold. And we couldn't. And if you look at I don't know if you can see this, but if you look at the Thursday's high, and I was watching this really closely right there, the high came right in to test that 45.50 area, and then we failed, right? So we failed there, and then sold off into the close. And what are we looking at for next week? I think an ABCD up would be very nice and it'd be easy to trade. I think long as we can hold 44.23 next week, upside is favored. And if 44.23 goes, then we're probably going to be back down here, and possibly it's probably going to be weaker conditions next week if we take out 44.23. The consolidation above that is okay, but I think everything's a little bit too tight at this point just to consolidate. So 44.23, if we can hold that, can expect to move higher, and if we can clear 45.50, then I think beyond the half square would be okay. Another reason why this half square area, if you go up to if you put the 90 square at the high, then this low as of Friday becomes a half square, right? And you can see the lows we had the week before was really on the 3/4, came through, checked back on the half square. So this is sort of textbook move out. So far it's good. That's why this, last week's low is really key here. And 44.23 is sort of a static number that's important. If you look back, you can see that it had effects in the market for one side or the other. But really, if we take out last week's low, even by a couple of points, then I think the upside's really going to be limited. We're probably going to go visit somewhere down here. And if we fail here, 4,000 is really probably the next mark. We're not going to mess around in here and stop and stall. I don't really see that here.
It's interesting because a lot of the stuff I'm looking at in NQs and and ES is positive for a rally next week.
Yeah, and if we do an ABC up, we're going to be up in probably. Let's see where we're going to be.
I think that might be new highs.
Well,
Yep.
yeah, almost new highs, right? It's like so.
Mhm.
It's possible we do that. It's possible we fail. It obviously it doesn't have to be an ABCD. We could do a lot of other things. But the fact that we came off of a 3/4 of a square, rallied up, and we stopped 1.5 square is very positive for now. So that would tell me at least we're gonna go up to the next the quarter up to test it, which is around 46.25, 46.26. So that's kind of what I'm seeing.
And Barry, there's something else that's going on, and we don't use this primarily, as a primary analysis tool, but the sentiment is really negative right now.
Okay.
And a nice rally up would wash out some of that bearish sentiment and create the fuel for the next move lower.
Right.
I do believe this is a bear market rally. I don't think it's the new bull move. I don't see that happening unless price does some serious work to the upside. It
Right.
looks like a bear market rally, and the way the market's acting, it's when you see stocks like Facebook and Netflix, trade like penny stocks, it tells you there's some issues that we have to work out.
Right.
So that's the bigger picture view, but I do think we're setting up for some sort of counter trend continuing.
Well, and bear market rallies have, and this looks like a bear market rally, right? Way it's working. Yeah. And if that's the case, we should probably come up and at least test this the quarter level, 46.25, that area up here.
Yeah, 46.60 was an area that I was looking at too, which is right up in the middle of your square there, so, and your box. So,
right.
We'll see. It's got to hold support first. That's what we have to see.
Yeah. So far, we drew up this box earlier, I don't know, a couple of weeks ago, whatnot, and that area held. So now we're sort of in the middle between the highs. Like I said, if really the 44.23 is a big level to watch.
It's a good level.
It's a good level. It's just one level. If we can hold above it, I think we can sort of float up. Otherwise,
and it balances your area there between the boxes too. Really.
Yeah. It's a good spot. It's a good spot where it stopped.
Yeah.
We'll see how it works out. Let's take a look at the weekly. Again, not much. We had a big wick and a big candle push up, went up. Now we got a big wick at the top, and we're back into the sort of the value zone. And we drew these boxes up last week.
Equal moves, right?
Pardon me?
The equal moves boxes.
Yeah, the equal moves. It's so meaning that was sort of a normal range for a correction, and so not much. We're kind of within range. Not much to add here, other than from last week. So we'll see how it goes. Again, the main thing is this is the first counter trend, so we got one bar up off the lows, and we just need more time to figure out the rest. See how it goes. Let's move on to bonds.
Interesting week in bonds.
Yeah, very good. A lot of feedback from bonds. Let's just say. And so we were looking for you to go test up in this the resistance area around 158, 157, 158 half square level, and we also had a little ABCD that ended up right in that range. So we couldn't muster up enough momentum to get up there, and so that means it's on the weak side, right? Obviously, we're below the half square, so that's weak to start with, and I remember when we made this sort of the double top. I remember my comment was, "Hey, then never make it that easy." This is coming back to
right.
Remember that?
Yeah.
So now what we have is an official sort of a false break in place. So unless we just turn around next week and start moving higher, which would lock in this false break, I think we're in trouble now. And I think we're probably going to go, we could definitely go and finish up the square. And so that's in the cards. How fast will it do? I'm not sure, but it's certainly in the cards now that we go and visit,
Boy, Globex tomorrow night's going to be real important
right.
in
So
bonds.
this square comes down to, let's say 149.5 or so is really where the square comes in.
Mhm.
And yeah, we could easily do that, barring that, this is not a false break and we don't just rally tomorrow. But it has to be hard coming off of that. Otherwise, I think we can. It's got 3-4 points to go lower.
Mhm.
Making that call,
which is a hell of a big move in the bond market.
That's a decent move in the bonds. Yep.
And that's going to have major ramifications for other
markets, right? Yeah.
Yeah, absolutely.
So that's our call, and there isn't a whole lot going on between these 2 points. So I don't know what else it could possibly do. So we have to go with that.
Yeah, it's important to watch that because especially like tech is going to get crushed if bonds get hit like that.
Mm-hmm.
We'll see.
Yeah. Well, long as it's below this half square, it's already soft, right?
Yeah, absolutely.
And the fact that now we can't hold this support here, I mean, this is sort of a trap. So it's certainly opened up. And I think, like I said, barring a false break here, which we'd have to watch price action on Monday, I think we open up, sub 150 in here. So let's take a quick look at the weekly bonds, which we... So here again, we've been, bearish bonds for weeks and weeks from what I remember. So
that's correct.
We're taking out every level and, you can see last month or so, we really couldn't get above the 1/3 of the square. It's looking a little weak. Now we're down to the quarter level. And if the quarter goes, on a weekly basis, we really open up, right? And fully possible, and I'd even hate to even imagine ABC off of that, but you never know. But for now, we're just looking to see if we're going to rally off this false break on the daily or not. But the bigger, the weekly square is definitely heading lower, and we can try a 72 here and see what that looks like. So at a minimum, I would say, up here, we couldn't even get to the half square of the 72. So it's weak, it should probably get down into that 150 area, 149, 150. That's my take on the bonds. Crude doesn't let us down.
A beast.
It's a beast and it's doing well. Not moping around like some of these other markets, like gold.
Right, that's right.
If you can hold above 91, we're looking at 96. How about that? Let's keep it super simple.
Absolutely.
Now, keeping in mind, we did 45 up into the square. So we have a, potential time cycle expiring here. And we kind of went a little bit higher than you'd want for it to square out at this price. And the 96 area is very close to the 3/4 up. So I think it's got a little bit more to go. So I'm looking at 96. I know they're not big legs, but we're looking at 96 for now. Like I've been saying, ultimately, the 90 would be the ideal place, which is, it's about $107. So a lot of stuff can happen. But for next week, yeah, let's keep an eye on 91. Long as we're above that, I think.
And we could even pull back and still be super bullish. I mean, look at the
in the big picture,
yeah.
Bigger picture, we can pull back all the way to the half square, so be very bullish. But I'm thinking because of the cycles, 91 is key now. If we get sort of under that, then we're not going to be rallying anytime soon.
Yeah, that would say to you that. Yeah, I would say to you that 45-day cycle's kicking in and it's going to consolidate or pull back.
Exactly. Then we'll do that kind of pullback you were talking about, where we'd come back and test the half square or something,
right?
And do a normal correction. But here we're so amped up. The pattern looks to me like, hey, let's just retest, just sort of do a quick retest and go. Meaning the corrections should be shallow at this point. This stage of the game, because we're up 45 already. And well, the other reason for the 96 is, we're 180 up from the March lows, and that's, 96, 97 is that high. So it would be nice, right? It'll be a nice squaring if we can get up there. So I'm kind of rooting for 96. We'll see how it goes.
I just saw you put that at the low, the COVID lows over there.
Mm-hmm. Mm-hmm.
Remember, that's less than 2 years ago. They
Right.
would have paid you to take crude.
Yeah.
I mean, the key thing is not the what ifs, and you can run through all the scenarios of how you can become a billionaire. That's just mind games. But the key thing is the emotions at these major turns
Mm-hmm.
are so extreme. And this is, I think, the most blatant example of that, where crude on the futures and the WTI actually went negative.
Right. Absolutely.
I mean, that's the key thing is if you can detach yourself from the emotions of the moment and pull back and really look at it in an objective way,
Mm-hmm.
that's where the huge turns are.
Right. Oh, speaking of, I was looking at another crude chart earlier. Let me see if I can. Yeah, Ben, I don't know if you remember this, but we did this chart.
Oh, with circles?
Yeah, this is a while back, and I can't remember which year it was, but it was before these lows.
Wow.
Yeah. So, and I was just looking at it before the show just to kind of get my sort of
Bearings on it.
And then I just noticed this line, this channel line, and look at that. We're almost tapping that. And that's when
We're at the top of the channel. Yeah.
It's a decent channel. And look at, so we're right there. So we could be, we could go another $3-4, but we're definitely long on the tooth here because look, we're coming all the way from, the bottom, right?
Yeah, man. Remember, I told you we're at the top. We hit the top of my square, at the top of the half square at my at the high.
So it's possible we're there. Now there is another line, coming off of these
higher.
highs.
Yeah.
It's right there, but
we're up there.
Yeah, that if I just move this up to now, we could be right there, or we could be right there, right? So if I put it on this high,
you're in the neighborhood.
We matched it, right?
Yep.
And if I put it at the high in 2015, well, that's probably right about
96, 97. Yep.
Yeah, it's right there.
Right. So
anyway, so that's the so I wanted to share that because we're coming into sort of a major level here. You can see that the upside channel here, and we have this other major level coming right into it, and we'll see how that goes. And I remember this circle because we were looking for this break. I think this was back in 18, 19, maybe 17. We drew this up.
Yep.
And I was saying, hey, when this circle breaks, we're probably gonna sell off a little bit.
to say the least.
Yeah, to say right. And then it's just boom. Never really didn't expect that, but there we are. So yeah, we'll see. But just to say that's what we're dealing with here. So it's we have a little ways. We have a lot of openness down below if it turns down. So we got to watch that. Anyway.
Right.
Let's go on to gold.
Your favorite right now, huh?
Boy. Hey, what is incredible, eh? How it's just hanging in there. What's incredible is how this fork is just right there. The momentum line is just.
I just go back to one of these old lessons that you and I have learned, which is as soon as they get everybody frustrated and people give up on the market, that's when they make the big move.
Right. Well, yeah.
It's coming. It's coming. I mean, we don't know exactly when, but man, it's coming.
Yeah. We'll see. But until then, we're in that exact quarter of the square, just stuck there for months and months, right?
Mm-hmm.
We make little small excursions, but we're back in this block between the half square, which is 1850, and then we have the 1765 at the bottom. So that's the big range. But within the range, we've been looking for sort of the trend, and the way we define it, higher highs and higher lows. And so we're getting
Which
that.
we're getting.
Yeah, we're getting there. It's sloppy, let's just say that. It's a sloppy trend coming off of 1700 area. So it is what it is.
Right.
So nothing much to add to this. We're still watching the same, 1832, the upper range, and 1765. Not much to do here. So watch what you're doing.
The thing that I would say is don't get lulled to sleep.
Yeah, it's probably good advice.
Be attentive on it. Be attentive.
Yeah. And that's why we cover it every week. At least I cover it every week because it's good to keep your eye on it, because when it starts to move, you want to be in on it because it's easy money, right?
And should be explosive.
And well, quickly, we already talked about crude, but here's a weekly crude looking at the 90 target. It's right around, that 96, 97 range. So we're right there. We're very close. So watch your longs, right? That's all we have to say about that. Getting back to finishing up gold. Again, we've been watching this for
months
and months and getting a little old, but what to do, so here's the triangle and we're still chugging through there.
Winding up.
Look, it can go another 3 months without any problem, but and it just might. Let's just tighten it up. So here we are, not much. Let's take a look at the dollar. Now, the dollar, last week we talked about how we're up in here is resistance. We're looking at that upper band. Looks a little bit like the one in that monthly crude chart, right? It's the same kind of a band effect. We couldn't even, quite get there. We did do a false break and turn down. So 1/3 of the square was pretty much all we could muster up. And we did talk about the half square. So at this point, half square is the key thing. We really want to be able to hold above that, even though we had this little move below that. This is the key level to watch for the dollar. So that's 95.18 is on the square, and we want to see it holding above that to be positive. And let me just add another trend line here. It's not dead, and we didn't exactly square out, but we did almost 180 up. So that counts for something. And we talked about that last week. We have been rallying for a while. The square starts last May. So time just does take, it does take a toll. And so we have to watch that. It's starting to make a little noise, right? The bells are starting to go off up in here, especially with this false break that we always talk about.
And that's a good example of a false break, because you had the break and then look at the fast move going in the opposite direction.
Exactly.
It didn't mess around. It just boom, boom, boom.
Yeah, and that is a good example of fast false break. And I think we mentioned it last week. If it wasn't for a false break, we should easily reach up here to the quarter, right? Or even higher. But you got to watch those. When a new high takes out an older high, you really want to watch that low of that bar that took it out. You want to see how price plays out. So anyway, we have a new trend line going. We'll see how it holds. Like I said, the half, this 95.18 area is the key level to watch. As long as we can, we might consolidate up here just like we did, November, December, January. So it might be that. We'll wait and see. Not much more to add in the weekly. Again, when that broke out, remember we talked about, hey, if it's not a false break, we're definitely going higher. And sure, it looks like a false break now, right? It broke the trend line and then came right back.
Immediately back into it.
But again, weekly basis, I'll tell you, weekly basis, the key level here is this 90, 94. Okay. That's really the level to hold for dollar to remain bullish. We can look, let's take a look at the 72 square here. Yeah, so then that 94 is right around 50%, 93.70 to 94. So I think we can look at that to be major support if we're going to come that much lower. But if the 1/3 holds in here, I think we can still go up and check a new high, maybe 3 drives to a high or something like that.
Sure.
So let's see what happens here. So far, it looks like a false break, but it needs a little bit more follow through to establish a new trend per se, right? So far, it's another correction in the in the uptrend, just like we had these other ones. All right. You want to add anything else to that? Or?
No, I think that's a good synopsis of the dollar. That you watch for those moments where you get a false break like we got, and then we have to see, okay, where does the counter move stop?
Mm-hmm.
And here we're stopping on support, and if we can hold that 95 area that you said, things will be okay. If not, then it's a different story.
Right. And here this was a sort of an easy thing to spot because it came at the 1/3 line, which is that green line, right? And the old high was right in there. So it was easy, sort of a textbook false break. And looking at the euro, like we do every week. Again, this was a false break in the euro, took out the old, snap back immediately, right? And then here we are, we're back up here. So just like the dollar has a key level to watch, so euro has a key level, and that's around, 1562, let's say.
Mm-hmm.
And that would be the full square down. Now we did make a half square. We talked about this a couple of weeks ago. We did make the half square. So it's really, this is sort of the decision area zone. Are we going to sort of slip lower into a second square? Or are we done here? And did we finish up that entire leg? I think it's a little too early to tell. Although we did have some big cycles expire right in here, not exactly on the low, but in this general area. So we're watching the price action to tell us. So till it takes out the full square to the upside, I would treat this to be a little bit soft, just like the dollar being sort of firm about that half square on the dollar chart.
Mm-hmm.
Idea, right? This half square. Going to the weekly, this is a much better picture of it. Here's the half square, about 150, and that's really the level we need to get above. Just like that was a level to stay above, and we broke through. Yeah,
absolutely.
So in between here, you saw the mess. So we just snap back to the upper boundary. So nothing to get excited about yet until we can really get above. I would say the 150 area, the half square. So far, I'm treating this more of a range bound, still like a range bound situation there.
No question. It's got to make a decision.
Yeah, we're still in this. All right, I think that's all I have.
Excellent review.
Thank you. Let me put it back to you. We'll cover the commodities.
Excellent. The NQ's up here, but each week, after I do the extensive review of all the commodity charts, Bitcoin, NQ, ES, everything that I look at, I kind of get a story that comes to me, that the charts tell me. I don't make the story up. It's the story that they tell me. And this week it was a lot about counter trends, about consolidations, about previous moves that ended, like in the grains, which we were talking about last week, and I mentioned that, in some tweets during the week this week. It doesn't mean the big picture has changed for any of these. It just means that, things breathe in, they breathe out. They move up, they pull back, they consolidate. And the message this week is that most of the commodities and charts that I follow are in one of these breathe out phases: consolidation, correction within a bigger bullish trend. That being said, I think NQs is a good example. Here, we don't have a bullish trend. We have a bearish trend, which anybody that's looked at our old shows, we know we kept talking about this and how this was trouble. And if we didn't get above this full square here, that we were really vulnerable and weak. And you saw what happened.
Yep.
Well, since the low, the low came on this full square here. The first push on the snapback came on the top of the same square right there. And then we've had a sharp pullback to end the week, but we closed above this half square. So what that says to me is that more counter trend, more chop, more sort of movement that's counter to this overriding trend, which is down now, that we should expect that. Doesn't mean we're going to rocket out of here, but it means, we're not going to see this sort of downside movement either. The probabilities favor that as long as we're above this half square, we're going to go back up here and test the full square again.
Right.
And I think I'm seeing this same thing in a lot of the commodity charts I follow. So the ones that I'm going to highlight, I don't have many to review, but the ones that I'm going to review are ones that are either have a good setup or are in the process of setting up for what potentially could be a nice fast move. Let's go to the first one. The first one is gold, which is a group of the sort of the monetary metals. If you throw copper in there, it's sort of the metals group, we'll call it. All three of these are in a phase, and they're setting up for some sort of bullish resolution, just based on probabilities here we're seeing. Gold is, as Barrie reviewed, has been frustrating everybody. We're in a roughly 18-month correction now. And the thing that I keep noticing on this is that, and we've talked about this, we've been getting higher lows and higher highs since we made this spike low in August. The triangle is tightening up. Not only do we have a triangle on the daily, this is the daily, but we have a triangle on the weekly, and we have a triangle on the monthly. It's the monthly is actually more of a falling wedge. And speaking of monthlies, tomorrow we're going to be recording the once a month show where we go over and review all the monthlies. So we'll show you what that looks like on there. So they're all sort of, gold is the first one I want to show you, but this sort of pattern of frustrating people because you think you got to break out here, you don't. Oh, you think you got to break down here, you don't. You think you got to break out here. We thought we had one a few weeks ago, pulls right back in. But notice again, it's another higher low, right? And we've started building again and pushing up off of that. So one day we're going to wake up and this thing's going to be up, 20, 30, 40, 50 bucks, and we're going to be broken out. And I think, and again, Barrie would agree that the probabilities favor it's going to be a bullish resolution. So I think you got to keep your eye on gold. It fits with the fundamental picture, which is, we're expecting, inflation and sort of geopolitical instability this year. All that factors into a positive gold. So I don't know what the event's going to be or what the moment of the breakout is going to cause the breakout, but it's looking like gold is setting up for a pretty good move higher here. Let's go to the next one. Gold's little brother, which is silver. It's been weaker than gold recently, but again, it's, we made this plunge low in August, and we made this false break low, followed up in September. We pushed out of there, came back. This is an exact double bottom, which is a rare thing to see, which also has me on alert. They may try and flush it and clean that out. But again, it's forming a triangle, tightening up. Higher time frames are doing something similar, where we're in a long-term bullish consolidation. The break on this is coming. When and how we're trying to triangulate that, but that's, the key levels to look at here for giving you signposts are like this 23.25 level, which is basically the balance point of this big triangle. And then, of course, this half square, if we can sit on top of the half square at 25, I mean, it opens up to, 30 bucks, 28, 30 bucks on silver. And again, to me, in my work and what I'm looking at and the cycles we're in and the fundamentals, the economic fundamentals, it really points to probabilities favoring the higher breakout on silver. Where are you on silver, Barrie?
Pretty much where I'm sitting with gold. So it's just a waiting game and waiting for the market to move and start to trend. But what I wanted to add was, these metals just don't quietly just start to move. It will do this, but it's, you have to think like a criminal when it comes to gold. So it'll probably try to do some kind of a flush, get everybody just completely out of whack and, off balance, and then take off, right? Just like a lot of these moves. So it's possible that we do something like that. Not that it's required. So, that's that's the reason for watching. So we know what's happening. So, and we know with all this compression, if we do a false break and we turn, that's going to be a good move following that. So a lot of possibilities, but we're watching to see how it's going to unfold, right?
Agreed.
Breadcrumbs.
Yeah, this double bottom is just so tempting for them to come down and sweep those stops.
And
so
that's exactly what reminding me of.
Yeah,
like
exactly. Yeah.
Same case in the bonds, right? We had that double bottom. It's like, oh yeah, right.
Yeah, right. Right. I think it's too tempting for the boys to leave that alone.
But once you know that, it's a good thing. We know how to get positioned. We know where the risk is. So,
yep, absolutely.
It's worth watching. It's worthwhile. So,
no question. Let's go to the next one. Copper is really interesting because this is and you'll see it on the monthly show. This is a major high level consolidation, but it's been going on since April, May of last year. So it's definitely frustrating people, but look at what's happened since August. This is one that really shows that the higher lows and the accumulation that's happening, and it's starting to get that curve in the pattern that you like to see when something's going to take off.
Mm-hmm.
So we made a low in August, made a higher low in September, had this spike. But look where that spike got caught. So, because we have these levels, we knew, oh no, we don't want to be buying at this spike. We got to clear this level, sit on top, and then we can go. And so we pulled back, made another higher low, and now here we are again. We got caught. I was talking about copper either last week or the week before, saying, listen, if we can break this half square, this is a breakout. Even before the big triangle breaks, that's a breakout that should get us up to the full square. So this level is really key right now, and this is around 457.
Mm-hmm.
If we can clear this 457, the full square is opened up, and that's like 481, 482.
Right.
So copper really, really has that curl, as I said, that you like to see. It looks like it's starting to move into a new regime from this sort of sideways chop.
Mm-hmm.
But the first test is going to be here, right? This 457. We got to clear that. We clear that, then it's sort of full steam ahead on copper. What are your thoughts on copper?
I don't have much to say on this. I basically fell asleep on it. So
right.
But we're watching again. It's the same thing. It's scratching. So we have to wait till it really. I think the block to clear is the upper, that half square. So, or we come back and check the trend line. It should work at least one time, right?
Yep.
That would be exciting. But other than that, and you have a tighter triangle. You have that steeper uptrend. You also have a steeper downtrend.
Yeah.
Second high, right? So
right in here.
No, from the high in October high to that. So
I see. Yeah.
Get about 3 triangles working it. So it's definitely some compression power building. So I think you're on it early. Like we were talking about the other day, usually on these things, you're on these way earlier than I get involved. So this is probably a good early warning message for copper.
Because I hate to chase, right? I can't stand chasing, and so this is what spurs me to get to pick up on these things early. And as I said, in the preamble before we came in here, these are ones that are not ready to go yet, but they're setting up. They're on my radar, and
they're worth watching. Yeah,
absolutely. I'm watching where I know we have triggers, and I want to make sure I'm on it when the trigger gets tripped. And so copper is one that, again, it looks like the weight of the evidence is for higher. We have to wait for the right levels, but when the right levels hit, I'm going to be on it.
Right.
The next one we want to talk about is one that's actually ready to go, and we can jump on this thing of triangles on both a daily, monthly, and weekly level. I'll review the monthlies on the monthly show, but the key thing to look at here is if we can stay on top of this roughly say 2,700 area, this is a major breakout. And on a monthly, it is a triangle that is years in the making. This is the same pattern that multiple commodities have gone through over the last 2 to 3 years. The grains did it. The metals did it. The softs did it. They all were for years, some of them 10, 11 years, were building these major triangles on monthly basis that they broke out of, sort of checked the breakout, and then took off. Cocoa is in a position to where if we can hold this breakout this coming week, it's going to be just like cotton was 2 years ago, just like sugar was 2 or 3 years ago, just like the grains were a couple years ago, breaking just like natural gas was 9 months ago, breaking out of major long-term formations that had a lot of energy built up in them and then translated into the stock price, or in this case, the commodities price. So this level here is really key. And as you can see, you can even see on the daily, how we've been going sideways for a long time. Now we deviated here, but see, it couldn't hold it and pulled right back. We deviated here, tried to break out, couldn't hold it, pulled right back. So this is what we're watching now. Can we sit on top of this 2,700 area? If we can, it's a major, major breakout. So that's my take on cocoa. Barrie, what are your thoughts? I know you've been watching cocoa and you've been all over this one, thanks to my prodding, but you've been all over it.
Yeah, we're on it. And
what are your thoughts?
Well, I just wanted to say that this is a good example of why we watch higher lows. We can see from November, December lows, how we made, higher lows, and then we got the breakout, right? We got the run up off the trend line. So this is the thing, if you watch them, you can catch them as they were happening in real time. And well, I just wanted to say that I think it's a very clean setup as far as the trend goes. If you didn't know that, or if you weren't watching it, it'll just look like, well, it's still sideways. I don't have anything to watch here.
Yeah, it's the same price it was in December of 2020.
Exactly. Yeah.
But the context is very different, right? And that's what we're talking about here, because what we're trying to do is get in front of one of these moonshots, right? That happen in these commodities. And is this guaranteed to be a moonshot? Absolutely not. Is it probable? Yeah. And that's the game we're playing. Let's jump to the weekly so I can show you the triangle break here. I mean, this on the weekly, this is a 2-year triangle.
Right.
Here's the deviation, right? We tried to break out in like September, October, pulled right back. So that's why we're watching this thing like hawks to say, okay, where is this next pullback going to go? Can we stay on top of this square? Can we stay on top of the triangle? If we do, super, super bullish odds that it's going to resolve much higher. And if you're looking at potential price targets on a weekly basis, if the breakout holds, I mean, you're talking over 3,000 at the half square. And if we do a full square, I mean, you're talking about like 3,400.
Right.
So it's a big move potential. And this is the weekly. So that's it. As I said, all the other commodities, like for example, the grains that we talked about last week about coming into highs and, being cautious there and taking profits if you had profits on them. They're going to go into a consolidation. Bigger picture, still very bullish. And when we do the monthly video tomorrow and record that, you'll sort of see the bigger picture view on all these commodities remains very, very bullish for the long term. It's just, on this show, we're much more tactical and from a tactical standpoint, they're either consolidating or correcting. So we don't want to get involved when markets are not trending. Anything else you want to add for this week, Barry?
No, I think we did a good, we covered everything pretty well. Just really had to be, eyes on the screen next week. We have a lot of key levels again. S&P, crude key levels, dollar key levels, S&P, NASDAQ key levels. So lots to watch.
Yeah, watch that
bonds and bonds
and bonds, big time bonds, and watch that Bitcoin level too, because as a proxy for risk, that's a good one. And you want to watch that because the resolution of that is going to tell us a lot about risk. And again, if you didn't catch the levels when we discussed them, remember we have the spreadsheet. We'll post a link to the updated spreadsheet along with the video when we post the link for that. So look out for that, and good luck everybody this week. Good luck, Barry, and hope we all have good weeks.
Thanks, Ben. All right. See everybody later.
Take care.